Alright, what's up everybody? Welcome back to Royal Blu FX. In this video we're going to talk about some of the trades that we've done today. This is a trade recap video, so for all of you who would like to follow and watch, please do so. Alright, so I start usually on a 30-minute time frame here. This is the New York session that I was trading today. I usually like to look at the 30-minute first and see where we are in terms of order flow. Alright, so you can see here we have a low and a high and another low and another high over here, all the way up here, excuse me, right over here, right? And then once this was formed, I always look to then see after the order flow is created. I like to zoom out a little more, in fact go to the 4 hour and actually see where prices reacting or going to react from. So if you zoom out just a little bit right here, this is where we are right over here. If you go all the way to the left side, you'll see that there is a supply zone. In fact, this is a swing high over here that has been that hasn't been mitigated yet, and finally over here at this point in time it has been mitigated. So you can see that price swept liquidity, it mitigated this high, and so I was actually looking for some sort of reaction happening here, right over here. So if we go back down to the 30-minute, I know that I can either look for sells. I should be looking for sells, right? However, the order flow on the 30-minute is telling me price is bullish. So sometimes a lot of you may have some sort of questions or concerns about, you know, which direction you should be trading. In this case, I will highly suggest that whatever time frame you're on, make it as your higher time frame or your demand time frame, okay, your major structured demand time frame, which means essentially if you're on the 30-minute, make sure that you're following 30-minute order flow and nothing above, right? Above the 30-minute, something like the 4 hour, for example, can sometimes manipulate you into thinking price is actually bearish instead of bullish, which should be bearish. Price should be going bearish on the 4 hour, at least to some extent, which it obviously did, and you're seeing right here, right? But anyway, without going too far off from the trade that I've taken, I obviously scoped out, you know, the analysis, knew that the price is pushing bullish. You can see over here we have a swing low, right, to the swing high there. Okay, if you guys don't know what a swing low, swing high is, I'd probably make a, I think actually I'd made a video on this already, so you guys can probably check it out on our YouTube channel. But in any case, a swing low is essentially when the low sweeps a liquidity and price starts moving. A swing high swept the high liquidity, the high over here, right, and then has broken a chalk, or at least has broken an old low like this, okay, and that confirms the range. So right here, let me go actually back over here, back it up, because I was here at 6 a.m. in the morning. If for those of you that are wondering, I'm actually in Los Angeles, and 6:30 a.m. is when New York opens. So this is what I saw, the chart. This is what the chart looked like, exactly, just like this, okay. The market was down here bearish. You can see it says 5:30. I'm going to move it to 6 actually, because it was 6. There we go. And then once I saw this, I did all my analysis, as you see, right? Then I dropped down quickly to the 3-minute time frame. Now I dropped down to the 3-minute, sometimes the 1 minute, but it's anywhere between the 1 minute and 3-minute time frame. And I'm trying to gather more data now, because the data from the 30-minute is large, right? It's just solid candles, as you see right here. It's just 2 solid candles. I like to get more data, and I like to try and see what has happened here since I have been you know, on the computer since last time. So here, let me just zoom out right over here. What I like seeing now is once I mark my swing low, my swing high, I like to know where my liquidity is. And let me just toggle my drawings on right here. You can see all this. Okay, so once I did this, I was able to find out where my liquidity was, which is the PLT right here. Now I just want to make sure you guys understand that this PLT is a liquidity line, right? I just use it for something different. It is liquidity. However, I use the PLT in a other fashion, in other ways of confirming sort of the entries and what price needs to sweep exactly. So For those of you that are wondering again, this is really just liquidity, but we use PLT in other ways as well. And it would be unfair if I told you guys what it is and how to use this exactly, because we have students that actually paid for this course, for the PLT course. So for moving further on, swing low, swing high, right? I marked out the PLT, or the liquidity line in this case. I have a new break of structure, a new high here, as you can see, right? Price broke, and then once I saw price in this area, right, I marked out this demand zone. Now, why did I mark this demand zone and not sort of this demand zone? Because a lot of people right here are assuming that price should come to this demand zone right over here and price go bullish, right? But you can see those traders that are waiting for you to buy were most likely taken out, right? They either bought here, lost their trade, and price ran up, right? However, the reason why I didn't do that is because this isn't a swing low in here. That's not a swing low. This is just part of the order flow. There's your buy, there's another buy going out, right? So there's order flow happening here. So that's why I avoided this area and went down for the area where there's the last down move before the buy went up like this. Now, again, the reason why I went for this one down here specifically is because we have what's called a flip right here. This is a flip zone. For those of you guys that don't know what a flip essentially is your last sell candle that failed, a last sell. So it'll look something like this, where prices are going bearish, something like this, and then prices are running the high. You can see that they're right here. This is a sell, right? That there were sellers here that tried to go to sell and break the new low here. However, they failed, and price ran the highs like this, right? And so essentially a flip is the sell here that failed to break the new low, and price flipped bullish like this, took out the high, took out the liquidity, came here and started running bullish. Okay, but in this case, so that's what the flip is. That's what the bullish flip is. The bearish flip is quite the opposite. It's just when prices are bullish like this, prices are doing this, right? There's your flip. There's your failed buy here, or the failed low that tried to take out the high, and it failed. So it flipped, and we want price to come and mitigate the flip, and then to continue, right? So if you look over here to the left, you can see that there's a flip in here, right? We had these two red blocks here signify that the last areas of where price has actually pushed bearish. You can see that there's a high that created a new low here, right, which broke structure. Then you saw this failed high that wasn't able to break the low, and then it flipped bullish, right? So this here is indicating that this in fact is a flip, and it's a failed flip. Okay, so there's actually a flip and a flip. You can see it here. There's your sell, right? And then you go up here, there's another sell, right? So this sell here, this high right here, failed to break the low, because what we're anticipating here, what we would like for price to do is to see price break the new low, right? But instead price flipped bullish like this and breaking a new structural high, right? And so that's that flip. This is the flip here, and then within this flip we find another flip, right? We see another flip right here. You can see it right down here. There's your sell, right? And then here's your other sell to buy, right? So it's a flip within a flip. At the end of the day, we revised this order block to accommodate this entry over here. So let's move further on here to explain to you guys why I took this trade today. So right here, as you can see, right below here, you can see it says 624. Right, we're nearing the US 30 Open right now, the New York Open, excuse me. Normally, I have this method called the one shot, one kill, where once the candle opens on US 30, I take an entry, whether it's a sell or a buy, obviously. Okay, so watch what happens here carefully. So once I had the PLT marked out, you can see the liquidity was actually swept by this wick. Unfortunately, wicks don't count as official breaks for us. They're just liquidity sweeps, and they don't record. So if I take this line chart, you'll see that no liquidity was actually swept. The only structure or anything that swept this low here was this body candle close below the PLT, right? So this was a hard, strong signifying move that signified to us that price wasn't over yet, and that this is the move here that is going to take price pushing bullish down. All right, so let's continue here. So again, the rules are very simple here, guys. If you guys want to understand this, it is liquidation, mitigation, aggression, chalk, boss, entry. That's all it is. Okay, if you can find your liquidity, or if you can find the PLT, in this case too, you'll be able to trade liquidity just fine. Okay, so this is that same model. That's those same rules here: liquidation, mitigation, aggression, chalk, boss, entry. Okay, so let's go to the 1 minute, because now we're nearing to the entry. Okay, right here you can see very clear right here there's a chalk happening, right? And this high broke the new excuse me, let me just zoom in here, right there. In fact, that was not, I don't know why I marked that as my chalk. It was, this is the chalk right there. Okay, and a chalk, it essentially is a change of character. You know, I'm pretty sure you guys all know by this now. This high here broke the new low right over here. Okay, it broke the new, this high broke the new low, so that is the chalk. Then we have the flip again. There's your high that couldn't break the low, so price flipped bullish, right? Notice right here, there's your high, there's your low. This is the new high now, right? That tried to break the new low, and it wasn't able to do that. So price then flipped, leaving us unmitigated here, right? So again, I'm being very patient here, and notice what happens. This is US 30 open right now. That's 6:30, right? That's 9:30 a.m. in New York time. Okay, and so I was a little surprised that price didn't come here right away, at least come to wick fast and then take price bullish. This would have been my one shot, one kill strategy method, and it works a lot of the times, right? But sometimes you work based on what price is providing you. You don't try and enter when prices or price didn't give you what you wanted, right? So if price is running up like this, and then you're all of a sudden price opens, you don't start chasing it. Obviously, that would be a bad thing to do. You wait for price to give you that reaction, so then you can take it, right? So obviously we didn't enter there at all, and price opened up, right? So this was my next anticipation, that price over here, we have a swing high right there, a swing high and a swing low now, right? We have a new range, and then this was my next area for entries. This is where I was looking for to enter. In fact, it was going to be this wick. So I don't know why I had this my supply zone in there. I must have gone down to the 5 seconds in here to find out if there's an order block. But in any case, oops, excuse me, this would have been the appropriate supply zone right there, because this is the swing high. Okay, and all this is internal liquidity in here, as you can see, and then price starts to move bearish. So I didn't take any entries here, however, because, and I'll tell you why, because price here, we haven't broken this high yet, right? We haven't broken this high. So all this was very concerning to me. However, what wasn't concerning was understanding what price was doing here. We have a new swing low that price took out the liquidity, and price started running bullish. If you do the line chart, right, you can see that price did actually break above. So that was another indication. I thought to myself, okay, well, if this is a wick, right, go straight to the line chart, and the line charts obviously don't lie, because the line charts print only the candle bodies, they don't print wicks. So you can see there's a clean break above the high, and that's what motivated me to take this entry right down here on the 1 minute. Now, bear here with me. I want to show you something here. Okay. Every time we're trading, we're always looking for ranges. We're looking for a swing low and a swing high at all times. And again, the swing low has to take out liquidity and chalk the opposite way, and has to take liquidity this way as well from the highs, which it just did here, took out the liquidity and chalk the opposite way. That would confirm our range, that we know this is where we're trading now. Okay, So let's continue. Right here, I had the PLT. I didn't put it here, but I had it right there. I saw this. This was my PLT right there. Okay, right there, that's your PLT. So this PLT here is essentially what I'm looking for price to sweep. You can see a lot of people, I even marked out this demand zone. I'm not gonna lie, I marked this demand zone out and I started looking for entries in here. Couldn't find anything in here, so then price failed, as you can see, right? You can see there, I even marked out my PLT right over here. Nothing happened. There was no opportunities for entries, so I excluded this area, no problem. So price continued going bearish. As price got here, I was surely convinced that this is my entry due to the fact that we had the impulse right over here, right, and all this imbalance in here. This was that flip that I was talking to you guys about earlier on with all the other flips over here, right? You can see that high not breaking the low and it flipped. So what you guys need to be seeing is, you know, flips become order blocks because they are a failed directional bias, essentially. When people are selling here, right, they fail to break a new low in this case and flip, and this is a failed. There's stop losses right above here, right? Stop losses. So price goes, takes out the stop losses. Price then goes run back up, come right back down to mitigate the last position that was unmitigated. Therefore, price mitigated it here, right? And we entered here. I'm going to be honest, this was quite an aggressive entry. I'm not going to lie, because normally I do wait for more confirmation. However, since everything panned out over here, you can see that break of structure. This gave me enough confirmation that we should be taking price from this low, let alone from a swing low here. Okay, when a swing low or swing high creates and price retraces all the way to the swing low, swing high, make no mistake that you can enter from those points, okay, from the swing low or swing high most of the time, because price has already swept liquidity and price normally just runs. So right, and another reason is because we were also bullish on the 30-minute. Everything is bullish. So here, as I zoom in here back into the chart, right, we entered with we entered right here. Right here, it was right there, right? And then once we entered there, we just held the market from here, right? Now I was marking everything out, just making sure that price wouldn't go below here, right? I'm managing it now. A lot of traders, when they enter, they just watch the market and just hope for price to go up, right? I'm managing the market. This is why I'm marking out extra, you know, supply zones or PHT, you know, areas, lines or whatever, right? Making sure that I'm reading price correctly so I don't misread the market. You can see here price is creating liquidity, so I drew this area here for a potential area where price can come and pull back, right? It didn't do that. Price broke a new high here. There's your swing point here, right? There's your chalk, although I didn't mark out the chalk, which is totally fine because I'm looking for the PHT. There you go. Price reacts to the PHT. However, we are bullish. We're not bearish. You can see here, this is a flip now. This is a breaker right over here, which I did not enter. I just entered here and held the whole trade over here, right? And then you can see that we had a TP here of 8.8%. This was a great trade, to say the least. And now this is considered to be a one-shot, one-kill method, because even though I didn't take the impulse here of the market, right, I actually took it after, which is totally fine. One shot, one kill essentially is you're taking one entry out of the entire day and taking the full, either the full momentum of the market or the secondary momentum of the market, which is this. And the secondary momentum is usually just highs and lows that creates like this most of the time, right? But the open is what I always try to catch, which is this, which is just straight imbalance, right? So that's what I usually catch most of the time. However, it didn't happen this time, and that's no biggie. All right, let's continue here. We took one more trade for the day here, as you can see right over here. So I'll fast forward the markets here. Okay, so knowing that price just barely broke above, you can see it is a break of structure. However, when you put this together, you can see that this is a swing high, there's another high there, and this is considered to be a liquidity sweep there, right? You can see it's liquidity sweep. That's your relative highs. I wasn't too sold on looking for buys just yet. I'm looking for price to come all the way here. So let's continue here. Price broke a new high again, swept what again? It swept more liquidity. So again, I'm not convinced the price is going bullish just yet. I need for prices to come back down, and I need prices to give me a new break, a structure, right? So let's continue here. There we go. So we see that there's a break, a structure happening here. As you can see, this is a chalk, right? It took out the high and it took out the low here. This is also a PLT, which means their prices could potentially rise, but we're not looking for that here. We're going to look at all the way down here when price gets down to this area eventually. Okay, let's continue. So right now I'm in the 5 seconds. Let's go down to the 5 seconds because I'm literally scalping all this. There's a flip coming right now. Okay, there's your flip, right? There's your flip, right? This is a low that failed to break the high, so price went up and it flipped. And so this should go bearish. However, I didn't sell it here. I sold the last bit over here. Let me just kind of zoom in here, right? And the importance here is to follow order flow. When you're trading, always follow order flow because you can see where the flow is, right? If the flow is way too low in the discount, don't sell it. If the flow is too high in the discount, if in the premium, then don't buy it, right? You need to have the flow in, in the discount if you're looking to buy, or the flow in your premium if you're looking to sell, right? So let's continue here. All right, you can see here we had another flip. This is why I was very convinced that once this high here mitigated this previous high because of the flip. I'll even mark, actually, hold on a second, let me mark that. I always mark my flips in pink just so I can see where the last flip was, so because flips are essential to how I trade most of the time with the PLT PHT. I mean, PLT PHT is all you really need, but flips really help you find your order block. Okay, let's continue. So again, look at that. There's your PHT there, right? I see that there's your buy to sell, excuse me. There's your break of structure right here, which I didn't mark out, but I'll mark it out here for you guys. There's my chalk right there. There's a low, there's your high, there's your low, there's your high. Price comes down, right? There's your chalk, and I'm looking for, I had my line chart like this, right there. So you can see here, very easy, maybe not very easy, but in my case I can see it. There's your impulse, right? There were buyers in here, as you can see, right there, right there, right? That little squiggly move that pushes bullish a little bit and then goes bearish, that's a buy. So there were attempted buyers here that were trying to buy, but then they failed. So that's a flip for me. And then price comes over here. Now you might not be able to see it here, but I saw it here, right there on the line, on the candle chart. Price swept above the PHT line right here and then mitigated and fell. So I was convinced again here that this was a area for entry and for the sell, right? And this was, we're going for 8.5% on this one. So this made a whole bunch of sense again for me. Right, so this is another win. There we go. We blasted right through, and that was it for that. So that was it, right? Most of the times, what I'm doing is looking for. I'm always looking for swing low, swing highs, flips, and PLT PHTs. That's really everything in a nutshell. But again, rules are liquidation, mitigation, aggression, chalk boss, entry. It's very easy. Everyone does it. It's nothing to hide. You can find this information anywhere online, I'm assuming. All right, guys, so until then, I hope you guys enjoyed this video. If you guys understood what I was talking about in this video, if you have any questions regarding this analysis, please do leave it in the comments below. I will review the comments, and I will write back to people right away. Other than that, please subscribe to this channel because we do leave valuable content, and I'm going to always start leaving valuable content from now on because I've been away from the channel for a while. So anyway, guys, I hope you guys enjoy your day. We'll see you later.